I appreciate you, Mr. Jerome Powell, sir. Because of his kind words today, our stock portfolio literally hit an all-time high today. This is the first time we're over $14,000 in our Robinhood account. Also, our Roth IRA in here hit an all-time high today. I know it's only 120 bucks, but it's still cool to see that hit an all-time high in our Moomoo portfolio. We're going to be doing a complete and total stock portfolio update. If you're curious about that, we're up 2.4% today. We have some holdings in there that actually hit an all-time high today. I'll also go ahead and show you my dividend income. Basically, Jerome Powell came in, was completely dovish, and basically reaffirmed that there's definitely going to be some rate cuts this year, which is good sign to see. Yeah, here's the dividend income I've got over the past 30 days. We'll show you this really quick. You know, we have Realty Income paying me monthly dividend income, but yeah, let me quickly show you all my holdings and give you a quick update on all of them because I don't actually believe it. It's actually crazy. So let me go ahead and show you my total equity in every single company. So how much each position is worth. And I'll now show you my total percentage change. So this is my lifetime percent change. The only stock we're down on is Google right now. And we're barely down on Google, literally 0.07%. I'm very tempted to buy a share of Google, you know, just to buy some more because I really like that company. But I'm shocked about this on Realty Income, you know, a real estate investment trust that really should have most of your returns through the form of dividends and not stock price appreciation. It's up 17%. You know, that's like Meta. We're only up 18% on Meta. That's almost the same as Realty Income. And we have McDonald's, you know, that one has been doing insanely good. We're up 16% on our McDonald's shares. They pay a good dividend. And then Constellation Energy, this one is my most recent buy in here. We're up 14.64% on Constellation Energy. And in our largest holding in here, you know, that led to a lot of our year-to-date gains is this company right here. It just keeps going up. It's super impressive. I love everything about that company. But let me show you my Moomoo portfolio today because this one is going insane. We have our largest holding in here, which is up 140%. This stock is up 6.77% today. If we just scroll out, you can kind of see how good it's doing. And look at the daily chart. It's literally it had earnings, and then this was the terrible Monday, dropped down to 146, and now today it's $190, which is crazy. Oh, the stock that hit an all-time high today, I want to show you this on the dividends reinvested chart, is a REIT, a real estate investment trust. Would y'all believe it or not? This company right here, CubeSmart, $51.60. If we zoom out, we have to go to the weekly chart. That's an new all-time high today for CubeSmart. But here's why I wanted to show you the dividend reinvested chart. Look at CubeSmart. As you can see, it definitely hit an all-time high today. If we go over to Robinhood, because this chart right here does not include the dividends reinvested, look at the 5-year chart. It says that, or right here, it says the all-time high was actually $56 right here, and it's 51 today. So this actually, you know, subtracts the dividend from the stock price, which for the higher yielding dividend stocks, I think it makes sense to look at. But I think it's important to look at both. And I forgot to mention that once I buy a stock in my Moomoo portfolio right here, I will never sell it for the rest of my life. So you can come back to my channel in a year or something and I will own all of these exact same stocks, I promise. Unlike my Robinhood portfolio, I'm allowed to sell stocks in there and trade. But anyway, let's keep going. We have EOG Resources. Whenever I click on a stock, you can see exactly where I bought it, the exact day, and my average cost basis. So EOG Resources has a rule where 60% of all the free cash flow that they make will be returned to the shareholders either through stock buybacks or special dividends. It's an oil stock, commodity stock, so you got to be careful. The next stock right here, Nike, I'm very impressed with. We were able to buy the dip. You know, when I was buying it down here at 76, 72, I was still nervous. I'm like, I don't know if they're going to recover, but looking back, I'm like, dang it, I should have bought more. Because look, we got the Nike shirt on right now. And I don't know if you noticed, I put a Nike sticker on the wall behind me. It's so tiny though. Anyway, let's keep going here. We have DocuSign. This company right here prints free cash flow. So remember, the market cap is around 10 billion. Let me show you how much free cash flow they make. So this is the free cash flow metric, $232 million of free cash flow in the most recent quarter. So this company makes nearly $1 billion of free cash flow every single year. So wait a minute, let's actually do the math on this real quick. So yeah, they're trading at 12 times free cash flow. But also, you got to subtract the stock-based comp from the free cash flow if you want to do a real number. They have a lot of stock-based comp, but it is going down. Anyway, Perion Network, we got to talk about this stock. We're down over $1,000 on them. I won't spend too much time on this, but this is a lesson of, make sure you dollar cost average into the correct stocks and to just dollar cost average. It's statistically the safer way. Not personalized advice, not financial advice. I'm not telling y'all what to do, but dollar cost averaging seems smart. And then here we have Bill Holdings. They actually had good earnings. They beat expectations, beat on forecast, but the stock fell 6% today, right at the market open. So it went from 50 to 45, which is pretty crazy. Not the all time or not the new low of 43. But yeah, I was buying this not too long ago at 50. What sucks about this, we bought a share for well over $100 at one point. So that's why we're down $300 on them. And lastly, we just bought this stock. This is Disney. Why am I buying Disney stock? It's super hated right now. Basically, look at this free cash flow right here. If you annualize this number, take the trailing 12 months, they're trading at a very fair valuation, in my opinion, if you do a multiple on their free cash flow, which is this right here. And I bet you're like, well, it's down 24% year over year. They also had some tough comparisons because the free cash flow from the last year was up 775%. So in my opinion, that is okay of them. And let me now quickly show you. Thank you all for being here first off. I really appreciate that. Let me show you my Roth IRA. So these are some stocks you've probably never heard of. Yeah, I just started this not too long ago. So this one right here, ticker symbol BRX. This is a REIT, a real estate investment trust, and they specialize in grocery stores. And what's doing amazing right now? Grocery store stocks like TJX, is it? And then we have Walmart, Kroger, Publix. These are all their top tenants. Then we have Krispy Kreme, ticker symbol DNUT. We're up 9%. This one's kind of just a joke. I mean, there's no real fundamentals here. Maybe the McDonald's partnership will help them out, but I'd rather own McDonald's, which I do. I own a ton of McDonald's. And then we have ticker symbol SEVN, Seven Hills Realty Trust. This is an MREIT, a mortgage REIT, so they do a lot of loans. And I like this one specifically because Extra Space Storage talks about them, which is a publicly traded REIT, ticker symbol EXR. They actually do loans through them. So I'm like, all right, that is a safe tenant. So yeah, that was pretty much it I wanted to show you. Look at today. I mean, oh, we just had this little spike up in the market today. Also, if you have any advice for me or if you would change my portfolio in any way, let me know in the comments because I hear a lot of people say I shouldn't own REITs or like super high yielding dividend stocks because they don't appreciate in stock price as much because 15% of my portfolio is in REITs. I have 9% in Realty Income, 6% in CubeSmart, and then we have BRX. So like over 15% of our portfolio is just in REITs, which I think is a safe allocation for my age. I still like the higher dividend yields and the monthly income with Realty Income, but also if you look, almost all my holdings have dividend yields of under 1%. Our two largest holdings up here, CSL and CRM, under 1%. Meta, Google, and Constellation Energy all have dividend yields under 1%. We have Powell Industries. Oh, actually, Nike has a 2% dividend yield. Then we have Powell Industries with a under 1% dividend yield and Disney. But Disney, can you believe they pay you not quarterly, but every other quarter? So every half year, which is kind of crazy. But anyway, that was pretty much my stock portfolio update. Thank you, Jerome Powell, sir. Because of him, we are. Dude, I can't do that.